Ladies and gentlemen, Newsbeat earnings picks. Let's see what we're watching this week ahead. Feels kind of weird not to trade today. Let's go ahead and prepare for the week. Nonetheless, I am Mark Melnick. This is the Newsbeat Show. Good morning, ladies and gentlemen. Welcome to the Newsbeat Show. Rarely do shows in the morning, but on President's Day, considering the market is closed, and a lot of you are probably your minds don't even know where to go because you're like so prepped to trade, and there's just markets are closed. So I figured I would take this opportunity and try to just share some of the Newsbeat earnings ideas with you. Share with you all the good and the bad, explain to you our methodology and how we go about picking these names. We do have a science behind it, and just show you a few of the names. I have a bunch of names here. I'm not going to go over every single one that we're putting on our list because I can't do a 3-hour show today, but let's just go ahead and talk about some of them. So, you know, earnings times is a very interesting thing. There are certain ways to play the earnings names intraday. There's certain ways to play it before the report, and it definitely brings a lot of volatility into pretty much, for the most part, every single name that does trade upon them. With that being said, I want to just jump into our methodology here because a lot of people have been asking. There are a lot of traders within our service that have been making a ton of money with some of these earnings names, and I could just literally go ahead and show you. This is right now exclusive in your Newsbeat Live membership. We edit it for free. If you're a Newsbeat Live member, there's no additional cost, and it pretty much goes through every single name we picked. We haven't picked a lot of names throughout the entire season. What is it about? I don't know, about 60 names or so, just approximately 60 names or so. I guess it's not like few of them, but it's not a ton considering where we are in the earnings season. And if you simply, we keep a very simple methodology for how we approach it. Again, just sort of, it's based on entering at the closing price and exiting in the morning. Regardless, we make special notes on them, like, you'll see like a half size here. We made a special note when I made an error over here on AMAT and I accidentally bought it twice over here, and because I thought earnings was that night, but it was actually the next night. Just simple things like that. So we did, update you. If you followed everything as is, you could potentially be up a little over $70,000, right? So as you could see, I did officially add two names to the list. These names constantly get updated. And I want to really share with you why I believe our system works and what I'm doing here, which is unique to the industry in the Newsbeat Live Room. Now, there's one thing to be said about charts. I mean, I know everybody on Wall Street swears by charts because it's the easiest thing. Everybody has access to them. When you start talking about fundamental analysis and things like that, you start running into what I like to call opinions. So if you're taking a look at some of these names here, you might have a certain opinion on a chart pattern. And again, I don't care what my chart pattern looks like. I don't care what your chart pattern looks like. There's going to be people who will look at the same chart and talk about bullish things about the charts and bearish things about the charts. And given a person who's been doing technical analysis for over half his life, um, I can always look at a chart and find something bullish or bearish. So what makes it unique here? We're actually going through the company dialogues. We're going through the company's literally their earnings call after they report. And we're going through prior reports and taking that information, analyzing it, finding out if they're bullish on what they're saying, and literally combining it with a bullish chart setup, and vice versa. If we're shorting names, which again, I'm not really sure. Do we have more short or long names? I mean, I never really look at it like that, but you could just see right here it says long or short. And you could just see there's quite a number of S's and L's and, for short and long. So, I mean, I don't particularly have a directional bias, but if I am going short something and have Walmart up because they're reporting, if I have a directional bias, for example, to the short side, I want the companies to use words like, it was a struggling environment, or we're cutting our revenue expectations, or our earnings per share, or we don't see things getting better, or anything even that's geopolitical, the tariffs, the tariff war with China and the US are hurting us. We see currency depreciation, which is huge for some of these companies who are earning money in different currencies and then needing to convert them over to another currency, obviously. So by combining all that together, I think that's why our system works. It is unique. I haven't seen anybody on Wall Street that actually tries to go through that. And what we try to do at the end of the day is just give you sort of the finished product. It's kind of weird because, on a lot of what I do, I like to teach traders exactly what I do, why I'm doing it, the statistics behind it. And that does cause a lot of success. On the earnings name, it's almost like going into a pizzeria and just ordering a pizza. Doesn't really matter if you see how they made the dough or where they got their sauce or what kind of cheese they're using and what they threw in the oven. They just sort of like put it on a plate in front of you. Of course, using pizza, my favorite food. So, with that being said, let's go ahead and share some of the earnings names that we will be putting on our list this week. Again, if you want the full list, it's for Newsbeat Live members, but I did want to share some of the sexier names with you if I must. Okay, so we're going to start off here with Walmart. And again, Walmart, we put down for a half position size. And again, our official list is here. We're going to track all our winners and losers, you know. And what I've noticed a lot, just before I get to this entire list, I'm going to go over Walmart, Cheesecake Factory, Stamps, Zillow, a lot of great names, Mosaic. I'm even going to go over. I'm just going to tell you right now, um, my goal is to be right most of the time financially. I want to give you an example, which few people like to do, is where I'm wrong. So here was a name that I was bullish on my list, just to show you, Datadog Long, right over here. Um, recorded $5,340 drop, P&L wise for this one. But, look, and yeah, we did make money obviously overall, but here's a perfect example. So I was predicting that Datadog here was going to gap up on earnings. It obviously ended up being wrong. It ended up gapping down. What is that? $2.59. And I just want to show you something on this one because I think we can learn a lot more from losing trades than winning trades all the time. It's one thing when a guru likes to show you everything and cherry pick charts. So I want to really highlight a losing trade here. And they came out on their earnings. It's hard to read. So I'm just going to, and I could even do it like this just because you need to see. It's just right off fly on the wall. There's nothing, absolutely crazy I'm doing here. So I just want to go ahead and I'm just copying and pasting it so you guys can, read it easily because the print is real small. I just want to show you what they went ahead and reported, okay? So I just copied and pasted it right over there. And this is what they went ahead and reported. They reported zero cents a share. That was ahead of the consensus of a loss of 2 cents. If it's in brackets, it's a loss. So they went ahead and they beat what Wall Street was expecting from them. Not only that, they reported revenue of 113.64 million. That came ahead of the Wall Street average analyst consensus of 102.41 million. For next quarter, they see themselves losing 1 or 2 cents. That's ahead of the loss of 3 cents expected. If Wall Street thinks you're going to lose 3 cents and you lose 1 cent or 2 cents, in this case, you beat them. Not only that, Wall Street thought their revenue for next quarter. So they reported Q4 revenue. See, reports Q4 revenue. They're already talking about their future projections over here. So they see their future projections for next quarter, the next earnings for next earnings season. They see themselves earning 117 to 119 million. That's pretty far ahead of the 108.8 million expected. It's a solid 10% higher approximately, right? Not only that, for the full fiscal year of 2020, which is FY fiscal year 2020, they see themselves losing 3 to 7 cents versus the loss of 10 cents expected. And of course, overall, they see their revenue 535 to 545 million versus the 504 expected. Now, if you showed me these numbers before the report, I would probably lose more money on this trade. Just being, straightforward and straight up honest. Why? Because they beat across the board. Everything that Wall Street was expecting from them. Everything. I mean, like their actual report, their actual revenue on the current report, their future earnings per share, their future revenue, the full year for 2020 earnings per share, the full year for 2020 on revenue. They beat across the board. There is nothing bearish about this report. In fact, after this report actually came out, here's the funny part, is analysts didn't even downgrade it despite the fact that it went down. I mean, the only analyst that came out is Jeffries over here. And again, I understand that that might be just a little hard to read. And again, this is just off a simple fly on the wall site. So just showing you right here, that's the Jeffries, raising the price target on the name after the company's Q4 metrics suggested to him that its competitive positioning is intact. Its growth, new customers, as well as expansions within its base is supported by this evidence. He likes the fundamentals. But look at that. He came out and he upgraded it, the analyst. Why? Because the earnings were actually not that bad. Now, you might be sitting here thinking, well, why is it gap down, Mr. Melnick? Why did Wall Street actually gap this name down? And the truth is, I honestly don't have that answer. But I do know is when I'm able to way more often than not predict good earnings and bad earnings, you are going to come out way, 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 way ahead. And the names that I predict really well come out way ahead. Like, so for example, on that same earnings day, we called, what is this over here? Dexcom long, DXCM, the same on the same earnings list. And look at this one. This one gapped up percentage-wise even. I know it's a more expensive stock, Dexcom. Percentage-wise, this thing gapped up $31.59. Well over 10%. Well over 10%. This thing gapped up $31. So Dexcom also crushed it on earnings. And we were bullish on that one. I'm not going to go through their entire earnings report. But what I'm saying is, on average, if you're able to accurately predict these companies beating expectations and combining that with solid technical charting, you get the results of what you see. We don't choose every name. There are names that come so close to coming on my list that never make it. Now, with that being said, I'm going to show you what we're picking for next week. So at least now you have a good understanding of what I am looking for. Whether I'm right or wrong on an individual name to me doesn't matter. I think the ends justify the means when you do a strategy like this. We're going to go ahead and talk about Walmart here, and I'm going to be coming out officially bullish on Walmart. I did list this one as a half-size trade so far, but they basically are raising their fiscal year 2020 earnings per share view to increase slightly from 2019. They see their 2020 revenue in the high single digits. I am just, some people just want like the finished product here. I'm going to be bullish on Walmart. Another name I want to talk about is Wingstop. I like a lot of the names that I could like wrap my head around. Chicken wings and in highly processed, chemically induced sauces. Now that is something I can wrap my head around because it tastes good, and I could see people having a craving for wings and coming in and dropping it. This company came out on they reported on October 30th, right over here, and you could see they actually gapped up the next day. They gapped up like about $5 and then dropped right over here and then headed lower and then back up with the market. For this quarter coming up, the company said from last quarter into this earnings quarter, And again, Wingstop, I believe, is reporting Wednesday morning, just so we're clear. They reported 75 cents to 77 cents a share, and they raised it from 72 to 74. So they originally said we're going to make 72 to 74 cents a share. Then they raised it to 75 to 70 cents a share. Now, when a company that sells chicken wings comes out and does that, my thoughts is they have customers coming through the door. Maybe they have a new sale, maybe something with a beer. I'll be honest, I've never stepped foot inside a Wingstop. I couldn't even tell you offhand where one is without Google searching it, for example. But I am going to be making a call bullish on Wingstop as a result. Next, Cheesecake Factory. Now, this is one that is very interesting to me because all these companies, they started doing what's called curbside delivery, where you pull into a parking lot and somebody will come out and bring you your food if you order it, as opposed to, sitting there and waiting in a potentially long line to get inside a Cheesecake Factory. Not only that, all the DoorDash services, I use DoorDash and I use it for Cheesecake Factory. And, I obviously don't order from them super often, but on a special occasion I shall. Really good food. They raised their fiscal year 2019 earnings per share view last quarter into this one, reporting this week. They said they're going to earn 265 to 270 this week. That is way ahead of the 258 to 268 expected. To me, they said they see 61 to 66 cents, excluding acquisition costs, versus a consensus of 62 cents. That's about 63 and a half cents. I'm leaning towards the higher side because I just think what people are going to underestimate is the additional ways that Cheesecake Factory can sell you their food. It's funny when you have an Uber Eats or a DoorDash or a Grubhub that can potentially deliver this food to you. You have so many of these companies popping up. People are going to say, okay, let's look at local places to eat. Cheesecake Factory has obviously a tremendous online presence, being a publicly traded company. And just looking at a company like this, people are just going to go ahead and order food. They're going to go ahead and order food from them. I think I think they're going to beat across the board. I will be officially bullish in Cheesecake Factory. Going to the bearish side, I want to talk about Mosaic, which is more agricultural inputs and whatnot. This company had some of the worst forward projections I have seen in a long time. In a long time. They came out and they cut their earnings per share for this quarter. They reported on, by the way, November 4th was when they reported last. Ironically, on November 4th, they gapped the stock only down 12 cents the next day. It popped up here and then it fell down over the next couple weeks. So again, it's kind of hard to really know where the gaps come in, but what I have seen statistically is if you're able to accurately predict these things, you're going to make a lot more money on the names you're right on than the names you're going to lose on when you're wrong. And I'm proving that again and again. So on Mosaic, they said that they're going to earn 50 to 60 cents this coming week on their earnings. That was a drop from $1.10 to $1.50. So you said before you're going to earn $1.10 to $1.50. Now you're coming out saying you're going to own 50 to 60 cents on this thing. That is just absolutely abysmal. That is absolutely abysmal. They raised their synergy target for Mosaic Fertilizantes. Oh God, is that I don't know. Is that a Spanish company? Or an English word, I don't know. They're raising that by 50 million. With all being said and done, the chart looks kind of bearish to me overall here. Combine that with their massive drop in earnings per share view, and I'm just going to be bearish on Mosaic this week. Next is an interesting solar company, SolarEdge. This one has been really ramping up beautifully. Here's a weekly chart of SolarEdge. I mean, this stock has just pretty much been going up and up and up and up and up. And I wanted to go ahead and just talk about this one here for a moment. So I'm going to be bullish officially on this name, by the way. They see their Q4 revenue from their last earnings report into this one. Again, they do talk about company projections during these earnings reports. So that's what I'm doing. I'm analyzing the numbers from their earnings projection and combining it with the technical analysis. That is how we're getting these answers. So they said they're going to earn 410 to 420 million dollars this quarter, but the consensus was 394.42. So, when I see things like that, it just makes me think like, okay, this company is definitely going to pull ahead. For the record, I'm bullish on SolarEdge. I'm going to have a lot of names here. I'm going to share a couple more with you guys. Stamps.com, names that stand out for me. Stamps.com, we all know that this company has gotten absolutely shellacked recently. But what you are not, what people are should be talking about on Stamps.com, what people should be talking about on Stamps.com is um, they entered a logistics services deal with UPS on October 21st. Their last earnings, their last earnings was on November 7th, and they really were able to see the benefits of that. So here's what they did on their last earnings. The stock closed at $80.82 and opened up at 96.47. That was from also our Newsbeat last year's report, and we were bullish on the earnings on Stamps. You have Stamps trading lower than where it was on its last earnings report right now, even after the market has gone up. They raised their fiscal year 2019 earnings. So they're reporting right now for Q4 2019, even though it's February 2020. They're reporting right now for the fourth quarter of 2019 coming up this week. They said they're going to make 385 to 485 a share. The previous estimates was 360 to 485. And what I really like here is they're raising their lower end expectations higher, showing that they're doing a lot of things right. Again, Stamps is a phenomenally beaten up name on the weekly. You could easily see this stock used to be $285 back in mid 2018. The company definitely ran into some snags, and now after the UPS deal, I think this is going to be very bullish for the company. I will be coming out bullish on Stamps. And last but not least, I'm going to share Zillow with you guys. And it's the app which values everybody's house and, tells you, what these houses are worth. And this is very interesting to me, especially with the market being so highly charged here. I think this is the perfect time where people are going to be looking to sell their homes. Now, you might say, well, why would you think people would be selling their homes when the market has been having moves like this? Because people are going to, a lot of times, be looking to move. And when you're looking to move, and you're looking to either upgrade your home or even downsize it, and I believe will be more rarer cases in an economy like this, um, people are going to gravitate towards these real estate service apps. And just taking a look at a Zillow here, back in November, when they last reported, again, I just want to point out the name gapped up last November when they reported. They said for this quarter coming up this week, that they were going to earn 2.589 to 2.62 billion. That's ahead of the 2.5 expected. They also said that they're going to have revenues of 790 to 825 million. That's well ahead of the 751 million expected. Chart setup looks really bullish to me. I will be bullish on Zillow. So I just wanted to give you a little insight to the Newsbeat earnings names, how we combine fundamental analysis alongside the technical analysis, how we approach it, and my belief why I feel it's a superior approach and why it, produces the returns that it does. But I hope you guys enjoyed this session. Happy trading, make money. I will see you guys tonight for another Newsbeat show and tomorrow morning on the Newsbeat Live trading broadcast. Have a wonderful, wonderful President's Day.